Now, I think it's safe to say that macroeconomic conditions so far in 2025 have been less than ideal for investors, unless of course you're looking to buy the dip like a lot of us are. But with a lot of the market conditions like we've been seeing, a lot of single stocks and even ETFs are experiencing dividend cuts. I mean, here's just a few ETFs and stocks that have cut their dividend or decreased their dividend payouts in the last month or so. So that brings up a really good question I'm sure a lot of you guys are probably curious about. If you hold on to SCHD or the Schwab US Dividend Equity ETF that holds on to around 100 different holdings, what's going to happen to this ETF's dividend, the dividend growth in the future, or lack thereof if of course some of the underlying names in SCHD do experience a dividend cut due to the most recent market activity? So in this video, we're going to go through SCHD holdings and we're going to look through some of the names that could or might not experience a dividend cut. But then later on, more importantly, I'm going to share with you guys exactly what's going to happen if of course the stocks that make up this amazing dividend growth ETF do experience a dividend cut in 2025. So I promise you, if you're like myself and you hold a lot of shares of SCHD, which I personally do, well, then make sure to stick around, drop a like down below, and let's get right into this one. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now just to back things up for a second, the reason I like this ETF so much is not only because it's cheap to hold on to, it's not only because it's grown over time, and it's not only because it pays a decent dividend and offers dividend growth. But to me personally, the objective, the underlying index that SCHD tracks, which is the Dow Jones US Dividend 100 Index, the methodology that is used for this index is very high quality and basically makes it so it's very hard for single stocks to even get inside of it. Now, what exactly is the index methodology? I thought you would never ask. It says right here, the index universe is defined as a constituent of the Dow Jones US Broad Stock Market Index, excluding REITs. So just to give you an idea, I'm sure a lot of you guys already know this, but this is how stocks actually get entered into the Dow Jones US Dividend 100 Index, which of course is the index that SCHD tracks. It says first, stocks must pass the following screens: minimum 10 years consecutive years of dividend payments. So right there, all the stocks throughout the stock market, if they do not have at least 10 years of consecutive dividend payments, they are 100% not going to be entered. Along with that, minimum FMC of US 500 million and minimum 3-month ADVT of US 2 million. But that's not it. There's also going to be more and more screenings, things like free cash flow, things like 5-year dividend growth rate. There's lots and lots of screenings, which makes it once again very, very tough for stocks to actually make it inside the club. Which brings me into SCHD's holdings as of right now. As of filming this video, we are in April of 2025, so just as of recently, the reconstitution did happen, so certain names exited SCHD and certain names stayed in, and now certain new names are also within the ETF. Now again, for all these single stocks to make it inside here, they had to go through multiple different rigorous screenings, which again does not mean that these stocks are perfect by any means. I mean, I can't speak for everyone, but I see a few names in this list so far that I don't necessarily love, but it does mean that at least for certain, these names had to go through rigorous screenings, which at least nothing else trims the fat on a lot of other dividend growth names that might have made it inside otherwise. But maybe most importantly, looking at some of the top holdings of SCHD, these are some of the names we should most likely be more concerned with because again, the weighting of these names make up a majority of the ETF. I mean, for example, Verizon makes up over 4% of the ETF with almost $3 billion of market value invested. Then we have KO that makes up just about the same, about 4.37%. Then there's other names like ConocoPhillips, we have PepsiCo, we have Chevron, Ultra Group, Amgen, we have Bristol Myers, Home Depot, Lockheed Martin, AbbVie, Merck, Cisco, Texas Instruments, UPS, and so on and so forth, until we get down to some smaller names that make up a lot less of the ETF overall. Now the risk, especially right now with the macro market conditions, is going to be this. If any of these top names do experience a suspended dividend or a dividend cut, I mean, if you've been trading for as long as I have, around 8 or 9 years, you lived through the 2020 crash, which at that time, we did see multiple different names cut their dividends pretty significantly. But at least up until this point, all these different names, as you guys know, because they made it in the screening, have made it through multiple different screenings, like paying dividends consistently for 10 years plus. Now, it's not only that though, some of these stocks, maybe some more than others, also have raised their dividends a lot faster over time, which obviously helps SCHD's case to keep raising their dividends over time as far as an ETF goes. But it did have me wondering what would happen to SCHD's dividend if, of course, we see multiple different names inside the underlines get dividend cuts. So shout out once again to SCHD Stan Craig on X. He posted this: did you know SCHD will remove a stock from the fund if it completely suspends or cancels its dividend? He said, I reviewed the official methodology for the index SCHD follows, which of course is the Dow Jones US Dividend 100 Index methodology that we sort of touched on earlier. We did not go through the whole thing because it's pretty long, and he said he confirmed this. If a company fully cuts a dividend, it'll be removed the following month. No need to wait for the annual reconstitution. So that's huge right here. Because this ETF doesn't really churn all of its holdings that often throughout the year, it only happens during the reconstitution. This is huge because it means SCHD will remove the company and replace it if it happens within a month time frame. If a company lowers its dividend but still pays one, it does stay in the index unless it fails other criteria during the next reconstitution. This further helps protect SCHD's dividend reliability. So a few things on this. For one, it's not necessarily great that even if a company still pays a dividend, let's say it cuts dividend in half. That could of course substantially affect the amount of dividend income that SCHD could pay moving forward. But I guess the bigger news is that if a company does fully cut its dividend, it will be removed within the following month. Now that being said, I'm going to repeat what I always say, and I'm sorry for you guys that always hear me say this. If you are not comfortable holding on to what an ETF holds on to, basically, the underlying holdings, names like Verizon, names like KO, whatever the case might be for any ETF that you're looking into, if you're not comfortable with what the ETF has exposure to, then maybe the ETF is not right for you. And that's even coming from someone like myself that's been pretty critical about some of the top holdings of SCHD. Like I said, I'm not necessarily a fan of every single one of the top holdings, much less all the different holdings inside this ETF. But again, regardless what I think, these names made it into this underlying index because they passed through multiple criteria, which honestly is good enough for me. Now lastly, looking through all of SCHD's dividends that have been paid out historically. I mean, basically every single quarter over quarter, year over year, the dividends have been getting bigger. And depending on what happens next in the economy, if we do see more of a sustained downturn, a bear market, whatever the case might be, we could see this ETF's dividend grow slow or even stop completely. But again, just based off of historical averages, this ETF is paid around 10%, 11% more in income year after year to investors. Now, if for whatever reason there's a few quarters in a row where SCHD does not increase their dividends or maybe even lower them by substantial amounts, I do think that's going to definitely negatively impact the ETF, especially just the sentiment around it. Because let's be real here, a lot of us are buying into this ETF at least partially because it has offered so much dividend growth historically. So now that we talked about SCHD, the underlying index, the Dow Jones US Dividend 100, the methodology, and what happens if or if not there are dividend cuts or dividend suspensions in the future, I lastly most importantly want to hear from you guys down below. During the most recent market dips, have you also been adding more shares of this ETF to your portfolio? Let me know yes or no in the comments down below. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.